In ancient Rome, a woman named Aurelia Thesis inherited her father's debt. She had no money, no land, and no way out. To settle the score, she was forced into a life of household slavery, providing her skills to the lender until the day she died. Fast forward to 1,000 years, in the UK, a lender named D admits to breaking teeth and eye sockets of those who missed a payment. In the Philippines, they call it 5 to 6. You borrow 5 pesos, you owe 6. From an ancient time to today, the game is the same. If the borrowers completely repay a loan and never come back, the lending app only profits once. And that's the inconvenient truth no one wants to talk about. It's a multi-billion-dollar industry built on one thing: your desperation. Hi, I'm Emma, a co-founder of Moodeng Credit. Growing up here in Thailand, I saw firsthand how debt cycles quietly destroy families. Years later, I realized how many modern loan apps were using the exact same psychology, but just digitized. That realization became one of the reasons why we started building Moodeng Credit, a peer-to-peer micro-lending platform designed around transparency instead of hidden traps. Today, I'm sharing with you the history and business behind these evil loan sharks and how have they survived every ban and every government crackdown in history. It started in Mesopotamia, where interest was born. Back then, it was just food money, seeds or olives lent to farmers until harvest. But then the math changed. For centuries after that, the church called lending money for profit a sin. St. Thomas Aquinas argued that charging interest was like selling a bottle of wine and then charging the person for the act of drinking it. It was double charging for time, and time, they said, belongs only to God. Before the 1800s, the term loan shark didn't even exist. The business model required a brand new target: the city workers living paycheck to paycheck. But the Industrial Revolution created a necessity. Banks wouldn't touch the poor. This left a vacuum filled by salary lenders. They didn't use guns at first. They used shame. They would stand outside your house and loudly denounce you to your neighbors in public. Then the mafia moved in. They realized that if a borrower was too scared to go to the police, they could charge whatever they wanted. You might think loan sharks are just tough guys in fedoras, but today they are in your pocket. They are digital syndicates operating across borders. In a recent case reported by the Bangkok Post, authorities busted a Chinese-run lending ring that was charging victims a staggering over 3,000% interest a year. Most victims are just like you and me. They take one loan to cover emergency, buy groceries, pay electric bill, or buy Christmas present for their kids. But the interest is so high that you can't pay the principal. So you take another loan to pay the first. This is a cycle of debt by design. Now let's look at the business model. If you borrow $500 at 5 to 6 rates, you owe 20% interest per week, and that's over 1,000% a year. The goal of loan shark isn't for you to pay them back. It's for you to never pay them back. Because every extension fee, every rollover, every late repayment creates another stream of revenue. And the scary part, many borrowers don't even notice the trap forming in real time, because the fees feel so small. The model is built on information advantage. With every single personal detail they collected from you, they hide the real terms in jargon, and they use enforcer to handle risk management. If you miss payment, they don't sue you in court. They get inside your head by threatening or harassing you or your family members. This is the scariest part. Is the psychology behind it. Because when people are desperate, they stop thinking long term. They think, how do I survive this week? Clearly, the business model of many predatory systems is built around emotional urgency, repeat borrowing, and long-term dependency on quick cash access. The tragedy is many hard workers end up blaming themselves for being irresponsible or failed financially, when actually the system itself is designed to keep them stuck. That's why ethical lending matters. And this is one of the reasons we started building Moodeng Credit, because we believe borrowing should help people recover, not trap them as convenience, but later found themselves in survival mode. Here at Moodeng, we allow transparent borrowing with borrower-defined terms, no hidden fees, flexible repayment, and on-chain credit building. Because finance should create stability, not dependency. Interested in debt psychology, modern financial systems, or human side of money? Please subscribe to this channel and see you in the next video. Bye-bye.